I'm going to show you specifically how to determine when this pump to the upside is losing steam, if and when it's going to turn around back to the downside, or how to identify is there going to be a stronger push of continuation up to the $45,000 to $46,000 levels. And you can put this all in your charts so you can dance to the same music as Bitcoin. Here's a short snippet on what this video is going to cover so you can identify how specifically it's going to help you. The weekly 10 is going to be your key point in specifically determining, oh crap, this is likely going to fall back down. And there is a probability that it simply will be that cut, clear, and dry. Monthly 10 EMA has been the big bad boss that has pushed Bitcoin back down. The point at which Bitcoin would be accelerating back to the downside is when it loses the weekly 10 as support. These are the key levels: monthly 10 EMA, which is white, the weekly 10 EMA, which is red, and the March monthly candle opening, which is roughly around 43,250. Therefore, price is going to be tricky around this. I feel it's extremely important that the way you're viewing your charts is seeing the smaller candles between 5-minute candles up to 4-hour candles, how they're behaving around these areas. I'm going to show you 2 specific ways to get a handle on, is Bitcoin going to take that next leg up closer to $45,000 to $46,000. It's important to note that yesterday's video covered specific hopium in the chart that was leading up to the signing of Biden's executive order related to crypto that happened this morning on Wednesday, March 9th. And with that clarity that was given, Bitcoin already had a strong posturing as of yesterday, and that clarity acted as a stimulus to give buyers the confidence to step back in the market. So let me go show you these key levels that you need to have on your chart. Are you ready? Give me the thumbs up. Thumbs up. Thumbs up. Hit the like button before we get going. I am on the 1-hour chart. I have on here the monthly 10 EMA, which is white, the weekly 10 EMA, which is red, and the March monthly candle opening, which is roughly around 43,250. These are the key levels. If you are okay with your chart getting busier, you would also potentially want to add in the weekly 55 EMA. Even though I'm not on the weekly or the monthly chart, I'm doing this with the MTF indicators over here so I can see how these small candles are specifically reacting to the weekly 10 EMA. You can see it got above, used it as support, came off of it, using the weekly 55 as resistance right now. You can dial in using this. If we take each of them off, it's very important to note that the monthly 10 EMA has been the big bad boss that has pushed Bitcoin back down. And per my video yesterday, the hopium, I let everybody know March candle will flip green, interestingly, alongside price roughly getting exactly to the same point that was the specific resistance point. Therefore, price is going to be tricky around this. I'm going to show you a 25-second clip of an update that I gave in an urgent fashion to my Discord community yesterday and the Cryptillion YouTube tier, specifically in regard to anticipating a pump ASAP on Bitcoin, because I could feel that price at a bullish posturing is getting ready to make a move up. This posturing from this point to this point, let me put a box around this. I need you to appreciate this. The price action in this box, that is a bullish setup. I can tell just by looking at it. That price is going to spike directly up, 39.9 and change, if not higher. I would actually guess 40K. It's getting ready to spike up, and it's going to happen very soon. That is a bullish posturing. That is not a rollover posturing. In context, this is a bullish ash posture. It's getting ready to spike up. Although that was just a snippet, if those types of alert would be handy for you, know that you can jump on a live call and talk to me directly with a camera and microphone up to 8 times a week. Links to the Discord community within the description section of all my videos. Make sure you follow me on Twitter at 𝐾osasverdes with the number 2 afterward, 𝐾osasverdes2. And if online community is not your thing, but you want exclusive content above and beyond what I offer for YouTube, go ahead and click the join button that's right below this video, and another quick video will pop up describing your options to you. The monthly candle will have gotten momentum, flipping green, roughly mid-month, which can often spell the rest of the month staying green. However, you have a key resistance at that level. Therefore, I feel it's extremely important that the way you're viewing your charts is seeing the smaller candles between 5-minute candles up to 4-hour candles, how they're specifically behaving around these areas. And by doing so, you're going to be able to dance to the same music as Bitcoin and be able to modify whatever positions you have very quickly. So let me show you my expectations using these specific levels. The point at which Bitcoin would be accelerating back to the downside is when it loses the weekly 10 as support. See this first hump, second hump, third hump. When did they each start turning around? Right around the weekly 10. It couldn't use the weekly 10 as support, dived back down. Couldn't use the weekly 10 as support, dived back down. Got rejected by the monthly 10, bounced around, accelerated after losing the weekly 10. The weekly 10 is going to be your key point in specifically determining, oh crap, this is likely going to fall back down. And there is a probability that it simply will be that cut, clear, and dry. Therefore, during this move, regardless of what ends up being resistance, whether it's the blue weekly 55, let's say in the least bullish case, Bitcoin comes up here, plays around, comes use this as support, wicks back up, gets rejected by the monthly open line, and then comes back down below the red. That's the point in which you can determine, oh shoot, there is a statistical probability I have a trading edge on price going back down. That's how you're going to manage that situation. I'm going to show you two specific ways to get a handle on, is Bitcoin going to take that next leg up closer to $45,000 to $46,000? The first way is simply using daily candle closures. I am only going to use the monthly open line and the monthly 10 EMA on the daily chart. If you can see a daily candle close above the 43,250 line, which is when the monthly candle flips green, that specifically starts to increase the chances that Bitcoin will get continuation. Does it give you an edge at that exact moment? No, it does not. However, the probabilities start becoming greater at a daily candle closure above 43,250. The next line of defense, you can see how these daily candles here did not ever close above the monthly 10. The next idea that gives you further trading edge to the upside is daily candle closure above the monthly 10 EMA, which is happening close in line. But what I could see happening is that a candle, maybe even today's candle, but maybe tomorrow's, comes up and closes between them specifically. Something to that effect. It closes between them. Therefore, if a candle were to close below the white line, the monthly 10, but above the monthly open line, therefore the March monthly candle turns green, you still don't have a probability of a move up higher to 45 to 46K. The way I would manage giving probability to an upside move is if Bitcoin can do two things: close a candle, a daily candle, above the white line, which is the monthly 10, and specifically the next day can close somewhere higher. I don't think the very next day would simply take off after one candle closure above. Case in point, this candle here got extremely close, but the next candle up actually had a move above that and then could not close. The second candle couldn't close higher. If there is a single closure above the monthly 10, I think the probability for an upside move closer to 46 to 45K, it gets even closer to 50%, but it's still not quite probable at that point. If you get two daily candle closures specifically above the monthly 10 EMA, that is when the probabilities specifically flip, and then you have a probability of a move to the upside. Now let's go look at what obstacles we're going to have if that were to happen. The next area of interest is going to be somewhere around 46K, and Bitcoin could have a little bit of trouble getting over this point of control of the overall year-long macro range, which is spanning from roughly 30K to 60K and goes back to early 2021. If you get two daily candle closures above the monthly 10 EMA, then you have a trading edge that Bitcoin will come into the zone at least to 45 to 46K. However, it also has a strong chance at that point to come all the way up to 48K to test the top line of the point of control. Therefore, your target for this next move after two daily candle closures above the monthly 10 would be somewhere in this box. And what you would want to do is zoom specifically into a smaller time frame like the 1 hour chart to see how the smaller candles are reacting to entering this zone. Is it going to blast above and come use this as support? Is it going to bump its head on it and come straight back down? You would want to focus specifically on that area, roughly between 45.8 and 48K. Now this chart's going to get a little busy, but let me show you multiple scenarios that Bitcoin could play out here. And this is going to help you prepare for the most likely scenarios of how this pump is going to play out. Here are the lines that we have: weekly 10 EMA, weekly 55 EMA, monthly 10 EMA. The March monthly candle opening, if price gets above there, the month flips green. The macro range point of control. I'm on the 1 hour chart. Possibility number one, let's start with the bearish and get more bullish as we go. Price dances just under the weekly 55 for several hours, comes up, starts getting rejected by the monthly 10 EMA, gives another try, spike up, and then starts heading down. This is where the alarm bells would start ringing, because then price would be going below the weekly 10 EMA, and that is your signal for saying, uh-oh, this is not going to play out. So the weekly 10 EMA being extended here. Price movement in this fashion would be very similar to the last 3 times that Bitcoin has gotten up to that white line. 1, 2, 3. It would simply be a repeat of what's going on there. And note, in that case, the month will have flickered green on the monthly scale because price would have gotten above this line for a hot minute, gotten rejected, and then come back down. And in that scenario, it is possible that the Scenario number 2 is if price can get above the monthly opening, use it as support. Also use this white line as support as well. Get above it, use it as support, come bump its head on about 46K, can't get above, wicks back up into it, then starts losing the monthly 10. March flips red again because it goes below that pink dotted line, makes a lower high, March flips green again, gets rejected, and then price starts coming below that ever important red line or the weekly 10 EMA, and price rolls right back over. And this would be a nice fake out to the upside because this local high would have gotten over the last 3 local highs. And the reason why this is possible is because this yellow area, yellow line here, yellow line there, this point of control has a year of price history behind it in interaction. It could end up being used as resistance. When price falls back into these ever important EMAs and fails to use them as support, that's when you know specifically, the move is losing steam. And when price gets below the weekly 10 EMA, that's when you know it's heading back down. But until it goes below the weekly 10 EMA, you're more saying to yourself, oh shoot, this is now losing steam. Particularly if you see a rejection and price falls back into these EMAs such as the monthly 10 or the month of March flips red goes below here. I wouldn't say that is the death sentence, but that is when you know the move is absolutely losing steam. Below the weekly 10 EMA is when you have a probability that it's going to come flying right back down. Another case that could happen, price simply bounces around here multiple times, continues to use the weekly 10 as support, comes up, starts using all the EMAs as support. The month of March is safely green. Price comes up here. It could either spike all the way to 48K or simply get slightly above 46K and use the bottom of this area somewhere around 46K as support and then make its move back up to the 48K land. That would be your more bullish case. Another bullish case could be price does something similar, gets up here, bumps its head on it, but then comes back down to specifically use the monthly 10 as support, maybe even retest the monthly opening for a hot minute, then comes back up, uses this white line over here as support because it'll be coming this way, and then consolidates under this yellow line here, and then spikes straight up to 48K. That could be another bullish case. But regardless of how it moves, you're going to have the tools to figure out when this is losing steam and or when this is going to come back down. You're going to be able to see Bitcoin either bumping its head on resistances or getting above and using as support. And the key indicator to determine, crap, this is losing steam, is when Bitcoin gets above those important EMAs and then doesn't use them as support on its corrections back down. That is your first little warning sign. This is losing steam. And the red line, the weekly 10 EMA, is the point in which you have a probability this is simply coming straight back down. Somewhere closer to 37 to 38K, if not lower. If you were not anticipating this move to the upside because you couldn't see or smell the hopium, click this video right here. This will help you to enjoy the idea that I was seeing hopium in the charts yesterday so you can discover why it'd be better prepared in the future. Click this video right here to keep in mind that there are still macro bearish signs in the charts on midterm timeframes. The video gives you tools needed to keep separation between your short-term timeframe outlook and your midterm timeframe outlook, which is still bearish. You just got Timified worldwide. Peace.